Welcome back to my morning report analysis videos with me, Richard Perry, market analyst at Antic Markets on Tuesday, 18th of July. Looking at cable, we've seen cable breaking out to the upside, but subsequently to that, we've had the inflation data out for the UK, and it was disappointing to the downside, and that has hit sterling today, and sterling's come under pressure. And what we are seeing is a little bit of a correction now. If the market closes down at these levels, that is a bear key reversal at a key high as well, 31.25. Sort of delves into the realms of corrective territory, doesn't it? You had that strong bull candle. You've sort of, I mean, it's a really difficult one, isn't it? Because again, I mean, this is the inflation data that came out. Big decline on inflation on the back of which has hit sterling. But prior to that, you were holding on to the breakout on cable. 30.50 was that old high that became supportive overnight, and then you went back. Sterling went back higher again, but it has arguably completed a top pass, and you'd say 75 ticks to the downside, so that would be 29.75 as your initial sort of downside target. That 30.50 level becomes resistance initially. From the breakdown, you've got these momentum indicators which are sort of rolling over now, really, aren't you, on the hourly? And it's all looking a little bit more corrective. Certainly if you close back below 30.50, which is that breakout which had held yesterday and held this morning, that would certainly, I think, be a corrective signal. That wouldn't look great, certainly in light of the fact that it would be a sort of bear key reversal effectively as well. Yeah, I'd be a little bit concerned. I mean, generally speaking, I think 30 figure, which has sort of been a bit of a resistance, psychological up to 30.50, so that 50 pip band of support, I think if you lost that to the downside, then yeah, that would certainly confirm, I think, the bears, or certainly the profit taking is coming in, and maybe you'd start to see a bit of a retracement again. But whilst 30 figure remains in place, I think you can probably argue that you're still okay, but that sort of you're also running the risk of that being a bear candle today. So it's sort of difficult territory with exactly how to play this, because certainly sterling has reacted negatively to this inflation data. So just be careful, I think, of the moves that, say for example, failing to the upside above 30.50. Say for example, we see that today the market sort of rebounding to 30.50 and rolling over again. That would certainly not be great. So I wish you good luck in your trading today, and I will speak to you later. Thank you.